Hi, this is Steve Erdman with the EFG Group and International Futures Group, coming to you from Chicago with today's Chart Talk. We're going to go back and talk about cattle again today, basically because the weekly continuation chart is so dynamic in some of the different formations that we're viewing and the implications of those formations. So we're going to go to the weekly cattle chart now, and I'm going to show you what I'm looking at. There's a lot of busyness going on in this chart, as you can see, but there's a lot to detail. We just violated with the last week's price action the trend line that we've been holding since late June of 2013, so that's almost 2 years old. And to go along with that, you can see what I suggest is a head and shoulders formation. The head was established in the fourth quarter of 2014. The left shoulder was established in the third quarter of 2014, and the right shoulder was established just after the first of the year, and just beginning in April of 2015. I also wanted to show you the balance that the market achieved this last week when we had the April contract expire and the June contract come online. I pointed this out about 2 weeks ago when we looked at the week of February, what was it? February of 2014, that weekly high of 153. We've gotten to 152.05 thus far, and that may be enough to create that balance that I suggested. You can see that spike high that we made is right to the right of the right shoulder box that I put in there. But the implications of this again are the flag objective. If this flag breaks down, you're looking at a potential of 132.50 in the June or the August contract. Remember, this is a long-term chart. The head and shoulders objective is even more bearish. The head and shoulders objective would suggest we have potential to the 125 area. So this corresponds to some of the recommendations that we've been making for the last 2 weeks and even the last month, being long corn, short cattle, being long hogs, short cattle, and basically just being outright short the June contract to cattle. It's kind of hard for people to get their brain around that because the cash market remains at a big premium to the June contract, but the beef market, the dressed beef market, broke $8 last week, and so the packers might be getting enough inventories where something like this could pressure cash prices and they could come down to meet the June board. So take a look at June cattle, take a look at some of the different trading opportunities, but as always, be mindful of the risk.